One of the world's largest banks just confirmed that Bitcoin should be $165,000 today. But they're not alone. Citibank, another multi-trillion-dollar bank, is also getting vocal about their 12-month Bitcoin prediction. But before we get into all that, let's dive into what Bloomberg said yesterday about Bitcoin's next 30 days.
Just a quick check on crypto prices as we begin the so-called month of October with strong gains. Traders are betting of a rebound after one of the harshest sell-offs in months. Cryptocurrencies shed roughly $300 billion last week as a wave of leveraged bets unraveled, but things may be looking up this month with Bitcoin ending in the green in the last 6 Octobers.
All right, guys. So you heard it here first. Actually, me and Kent were talking about it before. Shouts out to Kent, of course. You guys know him from SAZMINING. We were literally just joking about this before the show. Is like, are we still in the minority here? Or now that we have Bloomberg and mainstream media catching on to Q4 memes, starting to make me feel a little bit uneasy about it. And me and Kent were joking about that. So who knows? We'll see what happens here. But Kent, thanks for showing up today. And Nika's not here, guys. As you can tell, he's actually at a doctor's appointment again. He's healthy. He's still with us for a while. Anyways, I do want to chat about JP Morgan. So actually, let me full screen myself a little bit. If you guys know, if you've been here with us this whole year, you've seen the pivot that Jamie Dimon and JP Morgan have taken very quickly in the last couple of months. Jamie Dimon has been historically one of Bitcoin's biggest critics. He fought Bitcoin, said it was just for criminals and money launderers. And then slowly but surely, of course, since the Trump administration came in and embraced Bitcoin, he started to change his tune and essentially say, hey, if my clients want to buy this thing, then I'm going to allow them to buy it. I'm an American, et cetera, et cetera, et cetera. And recently he has, or rather, I'm not going to say Jamie Dimon himself, but JP Morgan, the institution he runs, they have been coming out very pro Bitcoin. And this new prediction is a similar prediction we have heard come out of Jamie Dimon in the last couple of weeks, but they added a couple of maths here. They got some math to back this up, and it really hinges on what gold is doing. So gold did pull back a little bit this morning, but as I've been covering for you guys on the show, what we're seeing in gold is telling us a lot about what's going on in the market. The investors out there, the market is looking towards hard currencies right now because they're understanding, or rather they're looking at treasuries and they just don't think of it as a good investment. So Matthew Siegel actually quoted this, and he goes, JP Morgan says Bitcoin is undervalued versus gold and highlights a, quote, significant upside to 165K. And this is where the meat, and it does get a little mathy here, but you know, the short of it is Bitcoin is probably going up very quickly, a lot faster than maybe we even think it will. And he goes, quote, the steep rise in the gold price over the past month has made Bitcoin more attractive to investors relative to gold, especially as the Bitcoin to gold volatility ratio keeps drifting lower to below 2, which is one of the big critiques of Bitcoin. It's too volatile, bro. Like, yeah, you know, for you crazy young guys, going all in on Bitcoin seems reasonable, but for a more TradFi investor, for a more conservative investor, it's still too volatile for most people, even though the volatility on Bitcoin has been going down. And historically, gold, you know, you can consider it volatile, though it's generally considered more of a safe, conservative store of value. So by taking into account this volatility ratio, which implies that Bitcoin currently consumes 1.85 times more risk capital than gold, then mechanically the market cap of Bitcoin at 2.3 trillion currently would have to rise by close to
You guys there? Did I accidentally just take over the show? I see the chat log here. I don't think that this was anticipated. If I am here, then this is going to get very interesting very fast. They did not pay me enough to run Simply Bitcoin today. I was supposed to be the sidekick. All right, I'm not seeing any comments, so I'm assuming I am not here. I am the show. My God, they didn't pay me enough to do this today. All right, guys. So ask me questions about SAZ mining. This is total an improv act at this point. And I know we were going to talk a little bit about Jamie Dimon. And then we were going to talk a little bit about SAZ mining at some point. So where will Bitcoin be by Christmas? All right, I'm going to tell you guys what I think is going on right now with Bitcoin. My base case has shifted. So that's what I'm making business decisions around for SAZ mining, but I am banking on the 4-year cycle being broken, and we go into at least the first half of next year, possibly second half of next year. What that means is, for me, the next quarter is going to be, I don't know, in around 150K-ish. I think we're up and to the right in a very boring sort of way until TradFi degeneracy hits a full-throated fever pitch, which, I mean, I think I'm seeing early indicators of that, right? Like, I think, what was it? Opti told me before the show that Strike is now going to trade on Robinhood. To me, that's the first hint of a TradFi degeneracy cycle playing out. So let's see. Let's see how that actually rolls. But I could be wrong. Like, the way I look at these things is, it's not black and white. It's not binary. It's a probabilities based situation, and there's still odds that we get a blow off top here in the fourth quarter. But until you see euphoria in the markets, I don't believe we could have a substantive pullback more than 20 to 30%. So euphoria equals bigger pullback, and that would mark closer to the end of a cycle. And I just don't see that happening this quarter. So SAZ mining. All right. You guys want to know what's going on with SAZ mining. So what's going on with SAZ mining is we are helping folks stack sats like Satoshi. Up until 2013, the era of the ASIC and Coinbase happened in 2013. And we shifted our behavior as buyers of Bitcoin. Up until then, if you ran a node, you were mining at the same time, or at least there was a little checkbox you could check and start getting, 50, 25 Bitcoin at a clip for successfully landing a block. And in 2012, 2013, that all changed with ASICs and Coinbase making it easy to buy instead of mine. And as a result, we are, as a community of Bitcoiners, acquiring Bitcoin not the way that the network was designed. Satoshi designed the network to distribute Bitcoin through mining it. And it is my firmly held belief that we are suffering the consequences of that, because the majority of the hash rate on the network is there to acquire Bitcoin through or acquire fiat, and using Bitcoin as a proxy to do it, right? You're a publicly traded company. You got a fiduciary responsibility to return dollars to your investors. You don't have a fiduciary responsibility to return Bitcoin to your investors, right? So by default, you're there to get Bitcoin and use that as a proxy for fiat. So what does that mean? SAZ mining is coming along and challenging the status quo for how you guys are getting your Bitcoin, right? And what that means is we just launched our 4th data center. We operate on 4 continents now: North America, South America, Europe, and now Africa. We've just launched a 4th data center there. Our clients are already hashing. Our first clients are. We just launched the offering last week, and the energy cost to mine a Bitcoin there is around 50K. Yes, I said that right. That is the energy cost to build out a Bitcoin position, is about 50K a Bitcoin. And that sounds crazy. It shocks most Bitcoiners to hear that, but it's simply taken how much does it cost to run my mining rig and how many sats do I get, doing division on that, and you get to see your energy cost of a Bitcoin. So pretty cool. You can DCA through energy at a lower cost than stacking via any exchange. And it's just better Bitcoin, because not only do you get it at a lower price, so more sats for your buck, but also you can do that outside of the banking surveillance state, right? All the sats that you receive are directly off the network, so nobody gets to see who has those. Well, I shouldn't say nobody. We do require name, phone number, and email, but you choose what those are. We don't require any personal identifying information. We just need to be able to communicate with our customers. That's it. So you go to our website, you buy a mining rig. We get you hashing in under 7 days. We do that with an innovative process, kind of first in the industry that's done it. And because it takes about 40 days to get a mining rig shipped there, what we're doing is we're using a virtual mining rig process to get people hashing quicker. That way they don't have to wait the 40 days, because we knew that was a pain point. Opti, you're back. I can stop shilling SAS mining.
Sorry, guys. Dude, they literally unplugged the internet in the house. They're doing construction, and they forgot about me over here. Okay, man.
Oh, little old Opti.
I'm sorry about that, guys. We do it live. We do it live. All right, we're back. Yeah, the internet, they literally unplugged me, and I've been trying to get on back. I'm like, what is going on? Okay, let me see. Yeah, culture first. Apparently culture first. So not to cut you off here, Kent, but let me just rip through this then, because where was I last? Did we talk? Did I get this part through at the very least?
No, you were just starting on it.
My God.
No, not quite, because you read most of the tweet. We didn't look at the chart yet.
Okay. So here we go. We'll zoom in here on the chart. And essentially what this chart is telling you guys is the difference between Bitcoin price and gold volatility. And of course, they're adjusted here. So they're comparing it. And this is starting to look like a better investment for people that are a lot more conservative on Bitcoin, or rather, a more conservative investing in gold. And it's starting to look like a very attractive investment thesis. Of course, to us, it's much more than an investment. We consider it the best money, period. But if you are looking at what goes on in hard money and hard currencies, then you're obviously very familiar with what gold does. And now we're starting to see the biggest banks in the world. And it's not just JP Morgan. We have Citigroup also doing something very similar, which is, predicting that the Bitcoin price might be doing something different now. Now, guys, forgive the headline here. This is coming from Reuters. And we know we're not the biggest fan of Reuters, but looks like Citigroup is being a little more bullish on shitcoins than they are necessarily on Bitcoin. So don't let the headline mislead you here. The headline from Reuters is Citi lifts their Ether outlook, boo, and trims their Bitcoin view as investor flow shift. Now, I think this headline is completely missing the mark, but there is something very interesting about what they are predicting here. So Citigroup, or the Wall Street brokerage, targets 133K in Bitcoin, a roughly 12% upside. So from this kind of reading, it does look like they're saying 133 by end of year. Now, for us Bitcoiners, we're like, dude, what, 12% end of year? Like, they really don't know what October means, do they? They don't understand how bullish Q4 is. But the interesting part here is that Citi sees a continued upside next year with a 12-month target of $181,000 Bitcoin. And this is where Kent and I were having this conversation before the show of whether we are going to see the end of the 4-year cycle. And I think that's kind of the new meme that we're all talking about. We're all wondering, because we've seen such a late delay in the Bitcoin bull run, does that mean we're going to be pumping into 2026? And if we do pump very, considerably in 2026, then I would also believe this is fundamentally breaking the 4-year cycle thesis. And I think we can really attribute this to the fact that there is a new investor in the space, and that is more of a TradFi long-term view investor. So we're going to see what happens with Q4. I know everyone's looking at what's happening to the price. We are at roughly 120K right now. We've literally already had as much gains that we had in all of September. So October is starting very strong. I'm feeling really good about this, except for, as I kind of posited earlier, that maybe because everyone thinks October is going up, maybe because Bloomberg's saying October, we might not be seeing it, guys. They might be ruining the meme magic. So again, forgive me for the internet. It was out of my hands completely. But Ken, I'm going to throw you the question. I know we were talking about this before the show, but your thesis is, your working thesis is that the 4-year cycle is over.
Yeah, and I hate to tell you this, but I scooped myself on this thesis because I knew you know, you threw me out to the wolves, bro. You suddenly cut off. I didn't even know that I was still live. So I started to talk about this, but yeah, just a quick run back on it is my base case at this point is that we're going 6 months out into next year before we hit peak euphoria, and I think it's TradFi degeneracy that leads us there. And that's my base case, but my base case is also very subject to being wrong. It's a loosely held opinion because this is a big deal to break the 4-year price cycle, and a euphoria blow off top could still happen here in the fourth quarter. I just don't see it. I just don't see the retail coming in. It feels too late in the cycle for it to happen now, but you know, a lot better men than me have been wrong before, so I'm not holding out totally. But I do have to make decisions for SAS mining, and I am building my expectations around going through June of next year before we hit a real cycle peak.
Wow, incredible. See, maybe we're a little more conservative than at SAS Mining, because our thesis for the last year or two is we're probably going to see a 2026 bear market. And so we like our whole business plan and everything we're doing is kind of preparing for the worst case scenario. Obviously, we would love to see a 2026 pump all the way into Q2. That would make our jobs here as I like running a business a lot easier. But yeah, we've been working on the thesis that 2026 is probably going to continue to be a bear market. Just it's hard to kind of break out of old patterns, especially if we've been in Bitcoin for a while. Like, I think building a business, you do have to take a little more of the conservative view here. So I'm applauding you, Ken, over there being like, no, we're pumping into 2026 and everything we're doing is planned like it's going to pump into 2026. So, man, you're a braver man than we are.
Well, by plan, it means, hey, am I going to get out over my skis and do something stupid? No, that's not what I mean. I'm just saying for based on like sales and growth expectations, I'm expecting a continue up and to the right. I mean, we haven't had a marketing budget until just a few months ago, and that's not going to change. I'm growing the business profitably and have been the last couple of years because it's been a difficult business to find investors for. A lot of people want to mine and get the Bitcoin, but investing in a platform that delivers mining to the masses has been a difficult thing for people to get their heads wrapped around. And as a result, you know, I'm not going to spend any more than I have. That's not what I'm saying. But in my mind and the decisions that I'm making for the various projects that we're building to deliver to customers and our hiring plans are being based on the fact that we're not going to see a cycle top until, you know, mid next year.
Love it. And I'm guessing, and I can't remember, you've been on the show a lot, but I vaguely remember you saying that you don't do price predictions, but what do you think about JP Morgan and Citigroup's predictions here? You know, once it should be 165 today, undervalued against gold, potentially close to like a 200K within the next 12 months. You think that's a conservative bet of where we're going?
Yeah, I think so. I mean, I think we're going to get, I do track price. I don't like to think too far out in advance. The way that I'm currently seeing it here is I think we'll see our first real test of market sentiment when we challenge the previous all-time high of 124K. You know, if we have a pullback there, that could say a double top, and then we could take a little bit longer to break out. If we break out right through it, I think that signals a different set of circumstances. So I'm kind of, you know, level to level here. Let's see what happens at 124K. But my sort of base case is about in the year 150, 170 at the most here. And I think, you know, one thing that's important if you haven't been around Bitcoin very long, and this is my third cycle, is to actually reflect on the percentage differences in previous cycles. So my first was a 2016, 2017 cycle. And most people forget that about 3 weeks before it hit 20K, it was at 10K, right? Like, we're talking massive moves. So to do an equivalent thing here to where, like, you know, my biological and synapses were trained with would mean that we need to go from 120K here to 250. And I just don't see that happening by the end of the year. That seems crazy talk to me. But, you know, again, better men than me have been wrong.
Yeah, I was telling you, I saw a tweet yesterday. And it said something on the lines of, if the price follows what we've been seeing for the first 2 days, obviously it's 2 days in October and everyone's feeling very bullish. We responded from 108 to now 119. So 10K in 2 days. Like, it feels good. I think we're all starting to feel some life back into us. But it was saying something on the lines of, and you guys could fact check me here in the chat, but it was saying if Bitcoin price moved 2% for the next 30 days, then that's very easily above 200K in no time. And a 2% move is not that big in the, you know, the context of Bitcoin. Though, like you are saying, you know, from $100,000 to $200,000, yes, on a percentage kind of timetable, it looks very similar to what Bitcoin has done in the past. But that will take a lot more capital this time around to really move the market. And like I said before the show, Kent and I were kind of trolling a little bit. And we're like, man, I'd be okay with just 140K by the end of October. At this point, just like a little bit of something is better than the stable coin that Bitcoin has become in the first 10 months of this year. So, you know, maybe we're just we're not fully bull-hearted yet, guys. I was talking with Luke earlier, and it's like, yo, if the price breaks 124K convincingly, like, I'm going to be more bullish than I've ever been on this show before. It's like, finally, we're in price discovery mode. We're back. Everything seems to be back in you know, the normal kind of train that we are familiar with. But yeah, I also kind of agree with what you're saying. Like 150K end of October. Sounds great to me. Maybe push it a little higher up in December or November. And if we do continue to pump, I have been saying for a while, it does feel that now, since the price isn't being moved by retail, I'm also kind of betting that we are going to pump into about Q2 of next year. It makes a lot more sense right now that is the trajectory that we're going on versus retail, where when you get a blow off top, they're, you know, scared, they dump their coin. Whereas the new person, the institution coming into Bitcoin, they seem to be acquiring Bitcoin for the long term. And if that's the case, and we have this infinite bid going, I think pumping into Q2 of next year, it's totally on the table. It's a non-zero chance of that happening.
Yeah, no, we're definitely not in Kansas anymore, Toto. It's a new reality. TradFi has proven that to me, and I still think though that absolute scarcity is something that I think only Bitcoiners that have been around for more than a cycle can really kind of start to get their heads around. Like, we literally cannot make any more Bitcoin. The only way to make Bitcoin in the first place is through mining it. So yeah, hop on board if you want to get on the Bitcoin printer train. But the reality is we're constrained by this 21 million. Like, that is it. Like, no more can be produced. Like, we've never had that before. And I think that simple fact of absolute digitally electricity enforced scarcity escapes the minds of the average person. And TradFi is going to come in and they're going to blow themselves up. That's been my running thesis for a very long time. And I think we're starting to see some early stages of that. But until we start to see euphoria, some serious price movement in the market, like, we're just going to be, institutions are going to be buying and then hedging out, slow up and down until that starts to break. I don't see the cycle ending.
Yeah, I kind of agree with that, though. You brought up euphoria, Kent, and we were covering the Wall Street cheat sheet psychology chart yesterday. What do you think we are in the cycle? Do you think we have left? Do you need me to pull it up? Do you remember the different kind of stages of the Wall Street cheat sheet? Because I like to get
pull
your
it up for some of your
Okay.
guests that probably also forgot, man.
Okay, because you know, we were speculating on it yesterday, because Nico and I had this conversation Tuesday, and we were like, where are we on this cycle here? So here's a chart, or maybe I need to get a better one. Hold on, let me get a better one. This one seems a little blurry.
Yeah, it's a little pixelated there.
All right, this one works better. Okay, so, and let me zoom in a little bit. I was kind of making the case.
Where are we?
I think we are like, we've been in disbelief for a while, just on a gut check, you know, on a gut level here on the show. we've been not thinking it's going to pump. And then for the last couple of months, we've been in this like hope, recovery is possible phase where we're just thinking like, I hope it starts pumping. I really hope it's going to go up. And so I think we're kind of entering into the optimism stage here. Like, I know that I'm looking at the price and I'm doing the same thing as you. Like once we break all-time high, then I will go into, oh, this pump is real. So that's kind of where I think we are. We're probably leaving the hope and going into the optimism phase, but we definitely haven't seen any form of euphoria yet. So, as trying to temper my confirmation here, my biases here, Kent, where do you think we are? Do you think my instinctual gut level is right here, or would you argue something different?
I think we're between the I and the M of optimism.
Okay, the I and the M. Wait, which I? The first?
Oh
I?
yeah, I really confused you there. The second I and the second M.
Okay, yeah.
No, I'm about where you are. That's my read on it. Third cycle. It kind of feels like, oh, this last pullback that we went through in September, God, it can be over yet is kind of the vibe that I get. And then, okay, now we're coming back to 124K. I think that breaking that out is the beginning of like some serious optimism. Is kind of where I'm thinking, and I could also see this stretching out. You kind of see that like that block there where it's going sideways and down and sideways. So I don't know.
Here, I'll zoom in a little more for people. Yeah, I would. I think I'd argue this. I think you're completely right. Between the M and the I right here, that looks pretty. Like that's what the price is doing to me as well. So, if Kent is correct here, it looks like we'll probably break out of all-time high, kind of consolidate on it, maybe one more dip, a couple, a little dip, and then it's really take off. So I don't know. I was kind of hoping we already got a dip. I was hoping we've already seen the last dip. So who knows?
The dips just keep coming, brother.
Wait. Someone said we spent all that time denying a cycle and the chart is a cycle. It's true. Except for, we'll cut this off. It'll be like anxiety is no more. So we can just cut this off at euphoria to complacency. And then it goes back into disbelief and hope and optimism. So this is the new cycle, guys. It's just going to stairway up and no more dumping.
Well, let me just say, for me, it's not that there's a cycle that's dead. I think that humans are humans, right? To me, it's like a 4-year cycle is what's changed. And so that whole chart, instead of that being compressed into a 4-year, it's now stretching itself out. And I don't know what that means for the future, but I still see a euphoria phase is going to happen. It's just when. And my base case for that is, Q2 next year at this point, maybe stretching further. It really just depends on when we start to see an actual euphoria phase build. That's what I'm looking for more than anything. That's my indicator.
Yeah, I love that. I mean, I've been trolling with Luke off air a lot. And you guys know my sentiment has changed on air as well, where I was definitely one of those, like, the price doesn't matter about Bitcoin. And then as we've gone sideways for so long, I realized how important the price actually is. It's like, if number doesn't go up continuously, then this whole Bitcoin thing isn't what we thought it was. And so I know everyone likes to say, oh, the price isn't important. I'm like, no, guys, the price of Bitcoin is probably the most important thing about it, is because it does tell us a lot about what's going on in the market and where the trajectory of this thing is going. Obviously, there's other features that we love, the censorship resistant, permissionless nature of Bitcoin, open 24/7 trading, all that stuff, just the most liquid market period. But the 21 million hard cap is the centerpiece of this. And if it doesn't continue to climb upwards, then it's either people just don't care about hard money and they don't realize that this is going to benefit their lives, or maybe there's some form of, rehypothecation that is really going to hurt us. So there's still a lot of questions up in the air, but it does feel good to see a little bit of price action. It does feel good to see some life back in the price. I'll tell you guys that much. We might be entering into wake up every morning and the price is going up phase of the cycle, which is something we haven't seen in a long time.
From your lips to God's ears, sir.
Love it. All right, guys. So I'm gonna keep this one a little shorter than usual. We're going way longer because I was off for 5 minutes. But I want to remind you guys to, of course, smash the like button, comment on the show, tell us what you think about the show, and definitely subscribe. We drop the most content, the best content on YouTube, and I have a jam-packed show for you guys. So Kent earlier said that we haven't seen retail. Well, it looks like we might be on the verge of seeing some new retail here. Robinhood launched some of Strategy's new products, and I think it's bringing up a very interesting conversation. And then I got a clip of James Lavish. I absolutely love James Lavish. You guys know I'm a macro nerd now. And he is back at it, explaining to people why the money they hold is monopoly money. And I'm really bringing it on because we were talking about JP Morgan, and he specifically says a dig about JP Morgan in it. So it's kind of fitting. It's kind of fitting. Now, of course, got to give a huge shout out to the boys over at Bitcoin Well. And I don't know if you guys saw, but they're making some moves into the Bitcoin treasury market. They announced they raised some money, and shouts out to Adam O'Brien. He actually took a couple of digs at people. He's like, I am going to show you guys how to do it with a productive company with cash flow and not a zombie company that's just trying to stack Bitcoin to pump their stock. So, hey, shouts out to you, Adam. Anyways, guys, scan the QR code here. And of course, when you sign up, you get 3 chances to win 1 million sats. I repeat, 1 million sats. What's that today? About $1,200. So once you sign up, it's free. Go toss some coins in the wishing well, and you can have 3 chances to win up to 1 million sats. Now, of course, if you are sitting on the sideline, get in touch with the Bitcoin Will Infinite team. They will show you how to secure your wealth, smash by $50,000 or more at a time. And the last thing that we love about them is they have never rug pulled you. They can never rug pull you because they never hold your Bitcoin. We think they're doing it right by ensuring that you're taking your Bitcoin into cold storage, which is literally the most important thing about Bitcoin. It's not enough getting Bitcoin exposure. You have to custody. You have to secure your own Bitcoin. This is how we ensure the Bitcoin revolution continues forward. All right, guys, I've taken long enough on this first thing, so we'll be right back in a minute.
I want to give a shout out to our partner, StampSeed. Is your Bitcoin in cold storage really secure? Are your seed phrases really secure? StampSeed's do-it-yourself kit has everything you'll need for you to hammer your seed words into commercial-grade titanium plates. Instead of just writing them down on paper, paper is fragile. Titanium plates are strong. Your words are actually stamped into the titanium plate with this hammer and these letter stamping tools. Once the words are in, they aren't going anywhere. No risk of the plate breaking apart and pieces falling everywhere. Titanium stamp seeds will survive nearly triple the heat produced by a house fire. They are also crush-proof, waterproof, non-corrosive, and time-proof. And now you can customize your titanium seed plates. You can upload your design or logo, and they will laser engrave it on the back of your seed plate, the opposite side of where the words are. Stamp your seed on StampSeed and use promo code SIMPLY to get 15% off anything on the stampseed.com store.
All right, guys. Also, by popular demand, the 12 seed plate is here, guys. So if you have a 12 seed seed word wallet with 12 word seed, get yourself one of these. So we are inclusive here, 12 and 24 words for everyone. All right, guys, let's go to Clark Moody's dashboard, look at some numbers. Currently, the Bitcoin price is $119,860, a decline from all-time high of a measly -3 point. It was 6. So negative 3.7%. Market cap 2.39. Actually, let me double check this. I think we are securely. I think we have secured the number. Oh no, actually, sorry. I was going to say number 7. Well, I don't know. You guys can check it for yourself. It says 2.389 is Amazon. This is 2.39. So maybe this hasn't updated yet. But I think we're very close to finally securing that number 7 spot. Bitcoin is almost bigger than Amazon. Well, it probably is bigger than Amazon currently. So yeah, I think I would say that. So 7th biggest asset in the world. Anyways, let's move over here and hear James Lavish explain to you guys why the dollars in your wallet is really monopoly money and how you can best protect yourself. Because if you don't understand this game, this is what it's all about. This is like the fundamental conversation that I think it's imperative to understand so that you really go into Bitcoin and realize what everyone is doing here. This is what it's all about.
The Fed manipulating the money supply, manipulating access to capital has absolutely caused what's called the Cantillon effect, you know? And so, and that comes from this economist Cantillon who figured out that those who are closest to the money spigot benefit the most. And so who is that? Those are JP Morgans and hedge funds of the world, you know, and they really benefit from this. So that, and the people who have capital, the wealthier demographic who have capital that are with those banks, that are, assets. They have assets. That's right. Too, and investments that are with those large banks. They're with the Fidelities. That they're benefiting from that expansion of the money supply because it goes into their assets and it goes, right to their bottom line. So
it's super interesting. The probably one question that I would have to ask is, like, this whole conversation really has been about the Fed. Do the Fed even matter anymore in any meaningful way, or is it just a signal to the market?
Oh no, sure, they matter. Absolutely. Absolutely. In fact, they matter way too much. They control the overnight lending rate that all these banks are tied to. So that creates a situation where we don't have much capital in the reverse repo anymore. It's actually drained, but it does, it causes the cost of capital to go up for everything. So, that's one thing. And then actually flooding the market with money or siphoning it out, you're manipulating the money supply. It's like you going into the middle of it. We're all playing Monopoly. We're all on the board. And, if you already own most of the hotels and I don't own any, and you all of a sudden you flood you flood the market with money, meaning you put more money in the bank, it's just going to benefit you, Mm-hmm. And so you're just printing more monopoly money. But you take it out, it's going to, that's the thing. It's like you're injecting and taking out money in this game, and it affects different people, different players in a different way. If you have assets, it's great. If you don't, you're toast. It just causes rises of pricing, rising in prices, and then you don't have the money to keep up.
That's the whole conversation, guys. This is what it's all about. If you understand some basics in TradFi and how the TradFi world works, how the central banks work, this is why we are Bitcoiners in the first place. And I love his analogy of everyone's just on the Monopoly board. Like, I don't know if you guys have seen that meme where you look at dollar. Do I even have dollars? Let me see. Do I have dollars in it? No, I don't have dollars. I was going to pull out $1 because it looks, if we have the colored bills, I love the blue Benjis. They look really nice. I like the blue color, but it literally looks like Monopoly money. This is what we're using, guys. It's all a huge scam here. And this is why you need to hold assets, or rather, this is why you need to hold Bitcoin. Bitcoin is like getting the best real estate on the Monopoly board. And it's not one where, you have to wait till someone gets on one of lands on one of your hotels here. It's like, as long as that Monopoly board, that money is moving onto Bitcoin, then you're getting more wealth over time. You're literally, acquiring more wealth. So I absolutely love that. I like saying we're playing Pac-Man as Bitcoiners. And I guess the new analogy is like we play Pac-Man while everyone plays Monopoly. And we're over here just acquiring as much Bitcoin as possible. But this is the whole scam going on. The more money that the central banks print, the more it debases your holdings, and this is why you want to hold something that cannot be debased. The 21 million hard cap. I think that's why it is one of the most important memes in Bitcoin. 21 million, guys. Everything divided by 21 million. This is how we know it's going to continue to go up. And like I said, I love that clip because he's specifically being like, the JP Morgans benefit from this the most. And now they're looking at the game and they're like, yeah, actually, this Bitcoin thing is very undervalued. Maybe you might want to get some. Without saying that you might want to get some, that's what they're implying here. So, guys, you know this if you watch this show, but if you're newer to the show, this is what it's all about. You cannot hold anything but Bitcoin right now, especially as Bitcoin becomes monetized. This is the best thing to be holding. As other people say, this is the fastest horse in the race. Wait. Yeah, I said that right. I said that right for once. Anyways, Ken, what's your thoughts on James Lavish?
Well, first of all, I've got a bone to pick with both you and Lavish, right? I live in a Spanish-speaking country. It's Cantillon.
I always say Cantillon too. I was following his lead.
Yeah, no. I think he's wrong, but no. I love James Lavish. I spent a bit of time with him over the years, and what I really like about James is he takes what I think is modern sorcery, finance guru land wizardry, and he actually makes it accessible. And I think that's a super impressive gift that all of us need, because it is unnecessarily confusing to try to understand the money printer and how it actually works. I mean, look. They've convinced us. I live in Peru, right? This is worth. I don't know,
wait. That actually looks like Monopoly money.
Yeah, that's what I'm trying to point out. Like it literally looks like Monopoly money, and it is a derivative of the U.S. dollar here, basically, as best as I can tell, here in Peru. And I mean, how did we get convinced that that's money? I don't know, but it's a crazy reality that we live in. And you're right. When you say that, it's sort of it changes the game of Monopoly that we're playing. So for me, I think you're right. I think we're playing a different game as Bitcoiners, and the game is we're saving Bitcoin. We're not saving dollars. And to me, that actual shift in the mindset to when you go to like, hey, I want to save Bitcoin, and how much Bitcoin did I stack, instead of, hey, how many zeros and dollars do I have in the bank account? That's the shift. That's what makes you Bitcoin. That's where you. Whatever it is that you want to call it.
I was like, dude, did we lose Ken or did we lose me again? Okay, you're back.
Okay. But to me, like, that is us actually, like, Bitcoin is the pin that's popping the fiat debt-based bubble. And as the air comes out, it's just bringing us back to reality. And to me, reality is Bitcoin, and fiat is a delusion. And the central banking and all that money printing mumbo jumbo wizardry there is kind of the greatest lie that the world's ever told, is that it's real and we've all bought into it. It's a form of wizardry. It's crazy that we've all sucked ourselves into that being true, but it's true. We have. Hey, wake up. That's not the story. It's not real. Move on to Bitcoin and we'll all be happier and better.
Yeah, 100%. And I like what you said about, the one thing that makes you a Bitcoiner is just saving in Bitcoin. Now, I know there's a lot of like purists and purity tests, and they're like, no, that's not what a true Bitcoiner is. But I think I would argue the same thing. Like, that's the fundamental shift here, is where you're not just looking at Bitcoin as an investment, you're looking at it as your savings. And that's what I'm saying. If you look at what money is today, until you can get that shift in your head where you realize, oh, like, why are we using paper IOUs as our money? And I'm building my whole life on this thing and trying to acquire as much of this as possible. And I'm so stressed out over all this, paper IOUs, this monopoly money, just because we've been told forever that it has real value. And then you shift to Bitcoin and you're like, oh, wait, my savings can go up. All I have to do is save in Bitcoin. And for most people, it just sounds too easy to be true. And I think that's also one of those mental leaps that they have to do, where, like, we say it all the time. And I'm sure you've said it to your friends and family, and they look at you and they're just like, it's not that easy, bro. You're like, your uncle's like, hey, I'm little Johnny. I'm glad you're getting excited about economics, but it's much more complicated than that. And you're like, no, it's not. Just start saving in Bitcoin and your life completely changes. And obviously now, especially from like the position Kent and I are in, and probably a lot of you guys in the chat, like, we've been doing this for so long that it's so obvious to us. But when you first come into Bitcoin and you first try to wrap your head around this, you're still kind of taking a leap of faith. You're still like, I don't know if this is fully true. I don't know if I fully believe it yet. And then you look back 4 or 5 years, 10 years down the line, you're like, yeah, that was the best decision I've ever made. Like, it makes perfect sense now. On this side of the aisle, it makes perfect sense. So I guess we still have a long ways to go to educate everyone around the world that Bitcoin's the best money, but that's just the opportunity for all of us to stack more and continue to ride this crazy roller coaster that is Bitcoin. So cheers to all of you guys. And yeah, it is correcting a little bit, but hey, 119.5, it's not that bad, guys. It's not that bad. We're all right. We're in this to win it. All right, guys, let's keep it moving. I do want to talk about Sailor and MicroStrategy. They made a pretty interesting move. The news in itself probably isn't that interesting. I think it's the ramifications that are more interesting, and it's going to be I think I'm going to watch this very closely to see if it does do what I think it will, and I'll explain all that in 1 minute.
I want to give a shout out to our partner, Ledin, the leader in Bitcoin-backed loans. Unlock the liquidity in your Bitcoin without having to sell your Bitcoin. They've issued $9 billion in loans to over 10,000 customers since 2018. I absolutely love these guys. Not only do I have an account with them, but I also have a loan. And what I love about them is that there are no monthly payments, and you could pay back the loan at any time. As soon as you send your Bitcoin as collateral, you'll have cash in your account within 24 hours. Over 1,000 five-star customer reviews, and they've never lost a single dollar or sat of customer money. Go to learn.ledin.io/simply today, and you'll get 0.25% off your first loan. I want to give a shout out to our partner, sat123.com. Sovereignty isn't just about your money. It's about your communications too. When the grid goes down, most people go dark. Cell towers fail in hurricanes, cyber attacks, and blackouts. But satellite phones, they don't rely on local infrastructure. Iridium has 77 satellites in orbit, giving you a direct line anywhere in the US, even offshore. If you hold your own Bitcoin keys, you should hold your own comms too. Sat123.com also has everything you need to start building your Bitcoin citadel. Starlink, battery backups, Faraday bags to protect your hardware wallets, and much, much more. It's a one-stop shop for anyone serious about resilience and off-grid independence. Stay connected, stay independent, stay sovereign. Go to sat123.com/simply today and use promo code SIMPLY to get 15% off anything on the store.
All right, guys, make sure what we tell you constantly to take your Bitcoin off the exchanges. Go get yourself a BitKey. It is by far the easiest and simplest way to secure your Bitcoin. If you lose your seed phrase, I know a lot of people lose their stuff. You will be safe. It's got multi-sig by default, inheritance by default. It's beautiful. Do I have it here? Actually, I do have it here. You guys can see. Oh, you guys heard that? It's got some weight to it. It's got some weight to it. The BitKey by block is beautiful, guys. I'm going to buy all of my family these for Christmas. That's going to be their Christmas gift. Spoiler alert, my whole family's getting BitKeys this Christmas. So scan the QR code and you get, I believe it's 20% off if you use the promo code SIMPLY. So stocking stuffers for everyone. Actually, it's going to be their only gift. I got like 7 people I need to buy cold storage for. So that's a lot of money. I'm going to get the whole family BitKeys for Christmas. Anyways, guys, this is what the news is around strategy. So here's a tweet. Strategy's preferred equities, STRC, STRK, and STRF is now available on Robinhood. And you're probably asking yourself like, okay, cool story, bro. Like whatever, Robinhood added some new products. Maybe you're like, I don't like Bitcoin treasuries. I guess paper Bitcoin. I guess we've entered eternal paper Bitcoin summer. It's not eternal paper Bitcoin September. It's eternal paper Bitcoin summer. But I think the interesting part is what are the implications here? And Adam Livingston, I'm sure you guys are familiar with his work. He's been very vocal and actually kind of got a huge rise from just being such a pro Bitcoin treasury maxi here. Hold on, I'm getting a buzz. I don't know what's going on here. And he goes, the kind of incremental depth immediately compresses bid-ask spreads, which draws an algorithm, market makers, making the preferreds cheaper to enter and exit, nudging them towards the 500,000 share liquidity screens that many income ETFs require. And then retail investors already account for roughly 1/5 of the total U.S. equity volume in 2025. And of course, Robinhood is the largest mobile gateway for that flow. And so the idea here is this a new way of getting retail into Bitcoin? Obviously, I want retail to buy Bitcoin just directly. But you're seeing a lot of products that are being created for a specific investor. And my question here is, I'm wondering if this is going to be a way of incentivizing a whole new round of retail. Now, I'm not the biggest fan of the new retail crowd being paper Bitcoin stonk, maximalists here. But I'm wondering whether the returns on these Bitcoin exposure products are going to incentivize people to kind of dip their toes back into Bitcoin. Obviously, as we've been covering on the show, money is tight for a lot of people right now. Money is tight for the majority of people in the world. And as sorry, I'm trying to figure out this buzz. I don't know if you guys can hear it. As people are struggling to make ends meet, as we were saying earlier, there is something about human psychology that as you kind of are, struggling to provide, you start to, and it's not the smartest move, but you start to look for, quote unquote, riskier and riskier ways to make more money. Now, I'm wondering if these products are going to be, shiny enough for people to get back into Bitcoin. And of course, strategy here, Saylor's been putting on a masterclass, and he just recently came out and said they want to get 5% of the total supply, which would, take the Bitcoin price like 10x from here and potentially even higher. And I'm just wondering whether this move is actually going to get retail into Bitcoin again. Now, of course, you can trade Bitcoin on Robinhood, but I'm just wondering, do people need kind of riskier and more shiny Bitcoin products for them to kind of dive back into the Bitcoin market after, so many years of maybe getting, rug pulled and dumped on? I'm just wondering if this is going to be a big move for retail. Or is this just a marketing gimmick for Saylor? But I think retail might like this. And so I'm going to pose that question to you, Kent. Do you think retail is going to look at this, or is this too complicated a product for retail to look at? And they need 42 IQ type products like me that just buy Bitcoin directly.
Oh, I think that there's a lot of TradFi that is just chasing yield out there. In fact, I think that's the majority of TradFi, and for me, this product is a yield generating product, right? Like, to me, I don't think they care at all if there's Bitcoin underlaying it. I think they're going to look at percentages and what it's done and say, cool, count me in. Let me throw money at that. And I think fundamentally, it's because what you were saying earlier, that people are tight and don't have a lot of money. And so I think when that starts to happen, there's actually more degeneracy.
Yeah.
People start to feel a bit nihilistic and hopeless and start to say, hey, cool, 100 odds with my last $5. Great. I'd rather burn my last $5 to get 1,000 or 500, with 100 to 1 odds, than I would, keep it to buy an extra bean burrito. It just seems like that's kind of the environment that we're in, is degeneracy. And if you actually look at, there's a great book that I read 5-6 years ago now called When Money Dies, that talks about how hyperinflation took place in Germany between World War I and World War II, and how degeneracy took hold and all of it. It's nasty, guys. And you want to be on the lifeboat. You want to stack Bitcoin. Even if you look at what happened during that Weimar Republic time period, I think it's 1919 to 1924 that the book covers. But if you take a chart of the price of gold, so Bitcoin didn't exist then, right? You couldn't get on that life raft. We didn't have the internet. A whole bunch of preconditions weren't there. But we have Bitcoin now. And during that time, the analog equivalent was gold. And if you look at the price of the German mark to gold, you see it whipsaw through this crazy volatile chart. And to me, that's symptomatic of where we are here today with Bitcoin. Is I think there's a lot of degeneracy that's going to go. And to me, this listing on Robinhood is kind of an indicator of that TradFi degeneracy that I was mentioning earlier. I think more people are going to jump into it just because, cool, I can make a good percentage gain on my dollar invested. And yeah, that'll bump Bitcoin's price because it'll help to drive Saylor to buy more Bitcoin. But I don't know that that's a meaningful driver of Bitcoin adoption.
Yeah, I love it. And I love the, actually, I was trying to pull up this German mark to gold chart here. Wow, I made the buds worse, guys. Sorry. So if you have headphones on, maybe you can hear it. But I was trying to find that one chart that we've seen around about the price, the volatility of gold. Here we go. Find it. I found it. Okay. I think this chart is so underrated. I think this is what is also going on right now. And oh, it's super small. Whatever. You guys can see the volatility here. But you can see the wild swings going on in gold to a fiat currency of the past. And I think we are starting to see something similar. And actually, there's this one that might be a little better to what we are seeing right now in the price of gold. As I was covering yesterday, a lot of people are thinking that the gold price is going to correct very heavily. But historically speaking, it could continue to rip even higher as we've seen in the past. So I don't know if you're an anti-gold bug and you're like, I'm going to make a bag by shorting gold, you might get wrecked is all I'm saying. I don't know. Hey, I don't know what's going on, but that would be my bet. That would be my best guess here, though. Ken, I do love your framing, though, of TradFi degeneracy like that. I don't think I've heard that before. Obviously, I know what it means, but I haven't heard it in a mimetic form like that. And it's so true. Like, that's exactly what's going on right now. And as much as you hear the siren call of the TradFi degeneracy, you're like, my saving grace is I realize myself, I have some self-awareness here, even though I have a 42 IQ. I'm fairly self-aware, and I just know myself well enough that I just buy Bitcoin, I store Bitcoin, I just hold on to my 32 sats forever, and hopefully that is going to change the trajectory of my bloodline. But TradFi degeneracy is that's gotta catch on. That's a really good meme.
Well, thank you. I don't know if I made it up or heard it from somebody else, but I'll take credit for now because I haven't heard anybody else say it. But to me, it's dead obvious. Like, our industry, our market learns by pain, right? Like, the last two cycles, it was very clear that that's what happened. Like the 2016, 2017 cycle was the ICO mania. Hey, go print your own token. This cycle, or the last cycle, was, hey, let's do some crazy leverage on hedge funds, right? I think that's what was behind Three Arrows and took FTX out, and the GBTC carry trade. I think, anyhow, there was some degeneracy there. It just seems like degeneracy is always what has to happen, and us to learn a new lesson. And it's pretty clear to me that TradFi has not played in a meaningful way with Bitcoin yet until this cycle. And so, hey, they got to learn their lesson. That's how you earn your stripes with Bitcoin. And so I absolutely think that we're going to see a lot of blow up, but it will be there. I actually think we don't see very much in the crypto sphere for blow ups. I mean, there'd be degeneracy there, but those are the same gains as always. I just don't think we see the massive blowouts happen in that particular sector this time. It's the TradFi guys that are going to have to wise up.
Yeah, well, I made a prediction a while ago. Actually, like at the very beginning of this institutional cycle, that kind of similar to what you were saying, that I think the next blow up is going to come from Wall Street playing in Bitcoin and not from some other shitcoin that's really going to affect the Bitcoin industry like we've seen in the past. I think it's going to be way bigger than we've seen in the past, but it's not going to come from, the corner of the market that you think it is. I also believe it's probably coming from Wall Street.
Yeah. Like we run some crazy number, like all of a sudden we get euphoria and we go to some crazy number. I've heard 400,000 put around. I'm not predicting that price, by the way. I just could see something like that happening. And then suddenly we have to come clear back down to like 80 or 100K, right? To like wipe out and smoke a bunch of the TradFi boys and give us another shot at clearing our bloodlines, right?
Yeah, my first knee-jerk reaction is like, please no, let's not do that again. But if it's, but I'll take it if it's blowing up Wall Street. I guess the trade off is worth it here. I guess it'll be worth the lols. You know, we might be way broker, but it'll be worth the lols. So I'll be okay if I'm dunking on Wall Street next year or end of 2026 or something like that because they blow up.
Well, here's the good news is that also means then they come to our side and they no longer see us as the enemy, and they're like, oh, I get Bitcoin now, and now we're pushing all the same direction.
Will they though? I think they're gonna double down in the degeneracy.
Oh, some will, but we'll get some converts every cycle. We get a new cohort of converts.
Yeah, I mean, as the saying goes, the best way to become a Bitcoiner is by getting burned in shitcoin. So I think Wall Street can be considered a shitcoin at this point. So you know that will turn some Bitcoiners out, but we'll see. It'll be a fun ride nonetheless, man. It'll be a good time. Anyways, let's keep it moving. We got Kent on, and he wants to share some incredible news with us, guys. Some insights into the mining space, their new venture. I'm going to pick your brain on this one, Kent. So we'll be right back in a minute.
I want to give a shout out to our partner, HIVE Digital Technology. Why HIVE in 2025? Unstoppable growth. As the first ever public miner, HIVE's position to quadruple their global footprint, making them one of the world's fastest growing miners in 2025. And with elite operations that consistently top the industry in Bitcoin mined per exahash, HIVE's now headquartered in the USA. They're lean and mean, they're green and clean, and they're rewriting the playbook on sustainable Bitcoin mining. You can catch the latest buzz at HIVE Digital Tech or at hivedigitaltech.com. I want to give a shout out to our partner, bitcoinben.io. If you're into freedom, Bitcoin, and building a real community, this is for you. Gain exclusive access to real-world, members-only, private clubs across the globe, featuring poker nights, expert-led classes, co-working spaces, educational meetups, live events, and more. Current locations include Sarasota, Nashville, Boston, Dallas, Las Vegas, and St. Louis, with new clubs launching soon in West Palm Beach, Scottsdale, Alabama, and beyond. Not to mention Bitcoin Ben's resorts in El Salvador. There's 3 of them, and they're absolutely beautiful. You'll also get access to the first fully backed Bitcoin bank with fiat ramps and savings accounts. It's called Private Key Bank, and you guessed it, it's based out of El Salvador. Go peer-to-peer with Bitcoin bulk buys, tap into home equity for long-term Bitcoin growth, and join their exclusive mining pools if you're interested in mining. What are you waiting for? Head over to bitcoinben.io, join today, where Bitcoin meets freedom.
Wait, Ken, I had it all set up so we could just jump right into it. But I really like the comment from whoever's handling the YouTube SAZMINING account. And he goes, at Saz, we live and die by Opti's words. So I really need him to be super mega bullish right now. I wouldn't do that, guys. Not financial advice, dude. Do not run a business based on what I say, okay? Oh, man. All right, Ken, enough jokes. Let's talk about this, man. You guys are making a huge move in Ethiopia, man. Congratulations. I think when you were on last month, you were kind of teasing this, and now it's official. So SAZMINING expands to Ethiopia, now on 4 continents, man. You guys are going global. Congratulations. And I think let's start with where we ended the last conversation. You were telling us that you were just down in Ethiopia. You were kind of teasing, what you were doing down there. So why did you choose Ethiopia, and what is it, not only just a competitive advantage that you think you're going to get down there, but like, what did you see when you came back from Ethiopia and made you go all in down there?
So alignment of incentives. I think if you're a Bitcoiner, you become radicalized to just the impact of incentives in reality. And the fundamental incentive that is driving the entire Bitcoin mining economy there, well, there's actually 2. There's an abundance of hydropower there. from GERD, which I'm forgetting what it stands for, GERD, a massive new dam on the Nile that's generating a ton of power. But there's also a ton of IMF debt in the country. And last year, the government brought in $250 million in tax revenue from the Bitcoin mining industry. That amount of dollars, they can't get it through any other export. And so us exporting Bitcoin out of there and bringing in dollars to do so is a game changer. And that's a golden goose that they're not willing to part with in any major way. So the combination of clean power, more clean power coming online, them needing dollars, it led to a very unique set of circumstances to how they're protecting, how they're acquiring the dollars, makes it a very secure and safe environment, especially now that in the last month, they've sort of cleared out like the early pioneering phase where they oversold the power that they had available and they had to sort of pick winners and losers. And now we came in at the perfect time where basically we're able to step in and buy the blood in the street. And what that means is low cost power rates with a good operator with long-term business stability. And what we found from being in Paraguay is that having a seat at the table at these geographical places that have oodles of excess hydropower leads to more long-term opportunities. So us planting a flag there was just logical. There's a couple more places on the planet we'd like to be, but planting a flag on Ethiopia for us brought us to 4 continents. So we're in North America, South America, Europe, and now Africa. And being a team of just 12 people doing all this is pretty freaking rad. And I got to weave in a little bit, and some questions were coming on the chat as I was, I'm twitching here slightly because I've had a head cold and took a shot of espresso right before jumping into the saddle here and didn't know I was going to be put on the hot seat with taking over the stream. So if you guys see me twitching a little bit, it's the caffeine jitters. But but how I got to Peru also came up, and it's I've lived a very circuitous life, I guess is how to say it. But I did rooftop solar out of California for about a decade, and had a dream of seeing the world and got burnt out. I was an executive, publicly traded company. I was competing against Elon's cousins until he came in and bailed them out, and just ran software, sales, publicly traded quarterlies, all that BS. And when they brought in a new CEO, I was like, cool, this is the perfect time for me to go see the world. So I threw on a backpack and traveled for a couple of years. And that was 2014 to 16. I fell in love with a Portuguese woman in Bitcoin during that time. So I landed in Portugal in 2016 and started entrepreneurial journey. And that entrepreneurial journey eventually led me to reading Jeff Booth's The Price of Tomorrow. And I realized, oh, I need to be in mining. And so I linked up with the original founder of SAZMINING. We pivoted the business, raised some capital, and have what we have here. But my wife's work brought us to Peru. So there is a very specialty clinic here that does drug addiction treatment, and she's a therapist. And it was better time zones than being in Portugal for most of our staff being out of the US. And so moved here, and I love it. It's a very simple life. And it's outside the culture wars. And I think Latin America, I'm mega bullish on Latin America in general. So that is Ethiopia and Ken Halliburton.
Love it, man. Love it. Let's talk about what you were telling me earlier of just the economics of mining a Bitcoin right now and how cheap it is to, mine a full Bitcoin versus buying. So I do have your site here, and it feels like this got way lower. Wasn't it like 60K last time we checked this? So is this attributed to the move you made in Ethiopia?
Yes. So we have lower cost
So you're
power.
getting super cheap energy.
Yeah. If you click on that don't trust verify, you can actually see the math behind it. So you go to our calculator there, but it's basically, hey, how much energy what's it cost to run my mining rig, and how many sats do I get? You just do division on that, and you have a cost of Bitcoin. And so we call that the energy cost of Bitcoin, or the daily cost of Bitcoin. It does not include the mining rig. Generally speaking, to get that daily cost of Bitcoin, it does take 1 to 2 years in savings. But why we started with that simple number is because I just discovered in conversations with Bitcoiners everywhere I traveled, nobody knew that basic concept of the value proposition of mining. I was just like, holy cow, we're missing the boat here, guys. This is the only thing. So like, let me just back the truck way up here and just for a second here and explain something that sounds super simple and stupid, but Bitcoin mining is the only way to generate Bitcoin, right? It's the only way. We don't know how to make Bitcoin any other way than mining it. And if you look at that, what that means is, as Bitcoiners, you're going to put dollars into something. Do you really care how many dollars you get out of this only thing, this precious 0 to 1 innovation that's a decentralized money printer? No, you don't. You want to know what the cost of that Bitcoin is as compared to if you had to buy it. And the truth is that it is very low cost as compared to going to an exchange and DCAing. And oh, by the way, there's a lot of other upside to it. So it's outside the surveilled banking system. Oh yeah, you don't have to worry about any point of purchase volatility, right? Like that's the sort of pucker moment that most of us go through. You throw a couple grand on an exchange and you buy it and you watch it, dunk by 20%. You just are like, oh my God, what did I do? I got to go face my wife and this is already down 20%, right? You don't have any of that, right? So the counterparty risk, there is still some. You still got to trust us, and we've done a ton to like optimize that trust in the entire business model. Like we don't make any money unless we're helping to make you Bitcoin. That's how our business model works. So we don't put any profit on the hardware or the electricity. We just take a percentage of the Bitcoin, and that means if you're not making any Bitcoin, we're not making any money either. So we've worked to optimize trust. Because at the end of the day, we have possession of something that's our client's property, which is their mining hardware. And our goal is to just generate as much Bitcoin as we can for you. And that leads to a better Bitcoin experience.
Yeah, I love it. I mean, considering, I would say your field where you chose to build your business has a huge black eye on, the marketing and just kind of the narrative around it. I remember I did one very early in my Bitcoin journey, and I didn't even throw that much money. I think I threw like, they were doing like the cloud mining stuff, and I threw like a couple $100. I'm like, oh, this is how I get some cheap sats. Then like a week or two after, I'm like waiting for like my one sat to come in. Basically, I finally looked at the economics of it, and I'm like, oh my God, I'm never even gonna get my money back. Like, what did I do? So like, you guys have been doing an incredible job. And just last question before we wrap up, Kemp. You were mentioning the turnaround of these new rigs. So what is that process for people if they're interested in this before we wrap up today's show?
Yeah, so I'm gonna geek out here. This is mining geek talk here for just a second. But what we realized is going into Ethiopia, it's the same operators that we're partnered with is brought us Norway, and that's at like 99.9% uptime. It's been a wonderful project. It's in the Arctic Circle, heat reuse, and our operators there said, hey, well, look, we've got a great opportunity in Ethiopia. We flew in to check it out, saw the alignment of incentives, saw what they had there on the ground, and said, yeah, let's do this. And it took us about a month of negotiation to bring it to market. But at the end of the day, we knew coming out the gate with our offering that, hey, there's a lot of well-placed criticism about Ethiopia, in general. Like, is this something that the market's going to be able to absorb? Like, yes, we've been working to optimize trust. I don't have an issue with it. I've got high trust for everything that's going on there. But is the market going to perceive this as something they can trust? And we identified as kind of the biggest issue is the wait time in between, hey, a client buys a mining rig, we get it shipped from China, we get it deployed there, because I just don't have enough money to go pre-order all the mining rigs and have them on the shelf to resell, right? So how do we shorten that gap? And we came up with an innovative approach that I believe we're the first in the industry to take, which is virtual rigs. So actually, it's kind of what you were talking about, except for we're doing it legitimately. So we go buy a petahash worth of hash rate, and this is where it's going to get really geeky. And then we break it down to be the exact same hash rate as the mining rig that you purchased, and we get that deployed to you right away. So we call it a virtual rig because it has all the same characteristics. You're paying the exact power costs. You're getting the exact same hash rate as if the mining rig were there. And that way you have hashing quicker, and you don't have to wait the 40 days that it would typically take to get it actually there on site. So as soon as it comes on site, we swap it out. You got your actual mining rig, you get your serial number then, but that way our clients don't have to wait 7 days before starting to benefit from a purchase with us.
Love it, man. You guys are really iterating, and I think leading that corner of the industry forward. So more power to you, man. Really, really huge congratulations for moving down to Ethiopia. Can't wait to see what you guys do next. Actually, could you tease? Is there any teasers yet that you can drop on them? You know, you did last time you were on the show, or just
Oh
check
gosh,
out
I don't know that
in
it'll be.
Ethiopia.
Yeah, check out what we're doing in Ethiopia. So we did do a couple of press releases last month, and I did talk about one of them, which is we've got Ocean. So we integrated with Ocean. We're doing the very first revenue share model with Datum and Ocean.
Oh yeah, not.
We had, yeah, we're not going to get off the. We're not going to go down that rabbit trail.
Yeah, don't lose our channel.
But, yeah, but. Oh yeah, did I just get you a strike?
No, I don't.
By saying that,
I don't know. I don't know. I'm just trolling.
Yeah, you got
Nico just walked in the door like, wait, what are they saying?
These guys are off the rails. No, and then we've got a rig performance. So what that means is we decided to tie because our livelihood is tied to your performance as a client. And so we said, hey, look, you buy a certain amount of hash rate. That's the valuable thing. We're going to guarantee that we're going to deliver that on an annual basis. And if we don't, we're going to make up for it with service fee credits. That way we can backstop our promise to deliver. It was a very easy step forward. So that was another innovation that we're the first to bring to market is both. So all three, Ethiopia with the virtual rigs, Ocean with the revenue share model and Datum, and then the third one being a rig performance guarantee that all our clients receive. Nobody in the industry is doing those things. And it's all because like we took a really simple idea, which has worked in Web 2, which is software as a service, and we applied it to Bitcoin mining. Where they're just the first to have tried it. And you would think that that's a really innovative idea, but I mean, a very basic idea, but apparently it's very innovative in the mining industry.
Yeah, man. Kent, well, again, I applaud your guys' efforts and what you guys are doing. Love to see it, man. So Kent, before we wrap up, if someone wanted to get in touch with you, where can they reach out to?
DMs are always open until I have an account that's too big and can't manage that anymore. But yeah, DMs are always open on Twitter at @KHaliburton's the best way. And then if you just go to SAZMINING.com, go chat. And we've always got our guys available to talk with you and answer questions. You know, check it out. You know, we think it's a better way to stack your coin.
Love it, Kent. Well, thank you so much for coming on today. All right, guys, that's it for today. This was episode, 1345. Wow, we've done 1,300 shows. That's insane. We will be back tomorrow. You guys already know we go live at roughly 12:30 p.m. Eastern time, Monday through Friday. We'll be back tomorrow for our normal show. Everything will be normal tomorrow, I promise. I hope to promise. I can't guarantee it, but, you know, things happen over here. This is your boy Opti. I will see you guys tomorrow. Have a good rest of your day. Peace out, guys.
Today's episode was brought to you by BitcoinWell.com, a Bitcoin-only platform on a mission to enable financial independence.